Hello again, and welcome to another one of our RaboResearch Food and Agribusiness Reports. I'm Brownfield Ag News anchor reporter Ken Anderson. Today we're going to discuss the long-term outlook for U.S. grains and oilseeds with Rabo AgriFinance Senior Analyst Sterling Liddell. Good afternoon, Sterling.
Good afternoon, Ken.
We are happy to have you here. And you recently co-authored a publication that presents a baseline outlook for U.S. grains and oilseeds, animal protein, and other major crop industries through the year 2025. This is a pretty interesting report. So first of all, why don't you give us, if you would, an executive summary, if you will, of the report, and then maybe we'll circle back and talk about some of the key points.
Sure. Just to give you a brief overview, our baseline outlook is a 10-year outlook. We're looking primarily at corn, wheat, and soybeans on the grain and oilseed side, but we also include in those equations what we think is happening or what the sensitivity is with animal feeding and exports and ethanol and other usages. So all of those are included in our outlook. We are coming off a period of time that's been very volatile in agriculture. We went through the early 2000s, or early 2010s and late 2008, 2009, when we had very exceptional margins in agricultural production because prices spiked. Then we went to a period just recently where prices have dropped off dramatically. So one of the big questions is what's going to happen in the future. In our outlook, we see primarily a stabilization of prices, although there's a lot of volatility around where prices are. We're going to see a stabilization around a mean of prices. So long-term, corn kind of finds a stable place to fit, soybeans as well, and wheat. And that's one of the key findings. The other is that although we'll have volatility, we expect to see margins pretty tight around the next 10 years so that it'll take a lot of management and good information to be able to continue developing, growing, and thriving in that environment. And really, the grain industry itself is kind of in a metamorphosis. The sourcing sector is having struggle making margins, as well as some of the processing sectors. So what happens in those cases, especially as farms continue to get bigger and more sophisticated and able to actually do a lot of merchandising on their own? What types of logistics needs do we need? What happens is soybeans has expanded to these new areas and remains long-term in places like Kansas and further west in the Dakotas. Do we have the infrastructure and the logistics to be able to crush and move those soybeans? There's a lot of questions that we address in the report.
Well, let's dig a little deeper into some of these points. And you do mention here through 2025, total acres for the three major U.S. crops, corn, wheat, and soybeans, are expected to level off, but you say the mix of those crops is probably going to change some.
Yeah, soybeans are particularly of interest because it's such a increasing global demand for protein and animal protein feed. Soybeans is really, soybean meal is primarily the animal feed for poultry and for pork, both here in the United States and also globally, where energy, which comes from grain, can be gotten from barley, wheat, and other grains. Corn is still a major feed, but soybeans has a very strong growth trajectory in the future, especially when we consider China and other systems that are developing pork and poultry production. So over time, soybeans comes off in the short term in terms of planted acres because we have the US, Brazil, and Argentina all ramping up in production. But over time, we see those acres growing because we do need those soybean acres in the future to feed the amount of animals for protein that we expect to have.
And what do you see happening to corn acres then?
Corn acres are an interesting crop because corn technology continues to improve dramatically. Yields in the United States improve rapidly. And as those acres, or the yield per acre increases, we just simply don't need as many acres. So over time, we see more need for a flattening out of corn acres, somewhere around 90, 91 million acres. And then over time, as technology increases at a faster pace than demand, those corn acres start to go down slightly. But we, this year, have found somewhere in that 90 million acre range.
You mentioned here, as farms consolidate due to tighter margins, new models for grain merchandising will emerge. These include farms with more storage looking for ways to improve profits.
As we enter a scenario where margins are tight, farmers will be looking for opportunities to improve those margins and need to be looking for those opportunities. Effectively moving beyond the price taker and finding ways to be more of a margin optimizer. That means in situations where storage has been invested in or can be invested in, that you may use the markets to hold on to the grain longer, look for basis movements that happen in local processors or feeders, where you can take advantage of that and deliver directly to the processor or feeder as opposed to going through an elevator. And that's already happening on a limited scale, but will probably become more prevalent because there's more margin to be gained by farmers that have the storage capability.
You say logistics and facilitation of the large farm merchandiser will create new opportunities for the grain origination industry.
A lot of farms don't have the capital or the interest in investing in infrastructure like additional trucks, trains, or barges. That means that there is a need for facilitating some of the logistics, even if farmers become more direct sellers. There's going to be a need for facilitating the logistical movement of the grain. In particular, in areas, as I mentioned earlier, like soybeans, if they move into a new area like Kansas, for example, where's the crush infrastructure to crush those beans into meal and oil? Does it exist in that area, or is there a need to facilitate the movement, regular movement of soybeans out of a place like southern Kansas into Nebraska or the Delta region?
And you also say volatility will remain a key risk. You touched on that. And you say it'll need to be monitored and mitigated, especially over the next 5 years.
Volatility continues to be an issue. There are two types of volatility. There's the type that's caused by demand side changes, where we have a new demand coming to the market, and the type that's caused by supply side issues. We don't expect new demand side changes unless we see some adjustment to the renewable fuel standard. But primarily, our expectation is that we will have continued volatility in weather. We, through our analysis, continue to believe that we are in a highly volatile weather cycle where we will see additional droughts, and that will increase the price of grains, but we will also see periods where prices are lower. Being able to have clear marketing plans and work directly with marketers or developing a marketing process within the organization will be very important for farmers, especially as you look out into the future. One of the other important processes there is making sure that there's enough liquidity in futures positions. If there's a futures position that's taken and there's the possibility that corn prices could go back to $6, which we see definitely a possibility that could happen, is there enough liquidity available to cover those futures positions? And even if you have the right position, hold on to that position so that you are covered from a risk perspective.
What are your assumptions on global production outside of the U.S., and where that's going to go over the next few years?
There's no sign that Brazil is going to slow down in terms of its development. We're still trying to get the right seed on the right acres in Brazil so that there's still yield potential increase in corn and in soybeans. There's expansion opportunities that remain in parts of the grasslands of Mato Grosso and Paraná and other states in Brazil. So there's no sign that that's going to change. Argentina up its trade policy to some degree, and it's allowing more grain to be produced and also potentially at some point more raw soybean exports. And that will be competitive for some of our main customers in the United States, like Peru and the southern South America countries, as well as China and other countries like Indonesia that are looking for more feed products. So the expectation is more competition globally instead of less. That means that we're going to have the continued effect of weather issues that could erupt in South America or the Black Sea region as they become more adept at exporting corn. They're already very strong on wheat. And this will affect U.S. markets more than it ever has in the past.
So to wrap things up here, Sterling, what's the main takeaway? What do you think is the main message that producers need to hear as far as this report is concerned?
Well, producers need to start looking at their businesses as management operations as being one of the most important parts of it. Now, I know that we manage the crop, we manage when it goes in, how it comes out. We're very good at producing in the United States. Managing the farm is going to be just as important. That means everything from land rent negotiations to the process of marketing and buying inputs. Economies of scale is very important. How can you gain an advantage by growing either yourself or banding together with other producers to be able to demand better input prices? Those are some key things to be looking at. From a grain merchandising side, looking at logistics and how that will function is going to be critical as well. Producers also need to be aware of financing opportunities. If they're able to control and mitigate risks and demonstrate that they understand and control those risks, are there ways of raising capital outside of the traditional banking process where there's capital that can be brought in to build organizations as opposed to just lending? Well, there's a lot of things producers need to be looking at in the future as these trends continue and we see this movement back towards the tight margin operation.
Well, Sterling, we appreciate you taking the time to visit with us today.
It's my pleasure. Thank you, Ken.
Sterling Liddell, Rabo AgriFinance Senior Analyst. I'm Ken Anderson. Thanks for joining us.